From the government's position, Kenyans are doing well economically. But when you talk to ordinary Kenyans, you get a totally different perspective. And in this video, I want us to discuss our economy. And I also want to inform you why it is important that you focus on economic issues, not just political drama that we've been used to all the time. So please, just take your time and listen to me break down everything, and I believe that the information I share here you'll also share with others, because that is the only way we shall be in a better position to make the right decisions in 2027. Otherwise, you'll allow politicians to set the agenda, deceive you, and ultimately they will get back to power where they will continue with the wrong things they've been doing. So please keep it here. And with this, I begin with a tweet from State House spokesperson Hussein Mohammed. Macroeconomic indicators today versus 2022. When President Ruto took office, inflation was at 9.6%, and right now it is at 4.6%. While the dollar or the Kenyan shilling was trading at 165, and now it is at 129 against the dollar. Our reserves by 2022 were at $5.7 billion, and right now our reserves are at $12 billion. Highest in independent Kenya, CBR 13%, and right now it is at 9.25%. GDP. Right now, our GDP is at 17 trillion Kenyan shillings, largest in East and Central Africa, 6th in Africa. Who can deny such progress? My goal here is to analyze this in the simplest way so that every ordinary Kenyan can understand, so that we are in a position to make right choices ahead of 2027. So I'll be breaking down this and trying to contextualize every aspect or every indicator Mohammed has shared here. First of all, when we talk about macroeconomics, we're looking at these bigger aspects or indicators of an economy. But when you narrow down, these aspects affect your daily life. So in that case, it means that they affect microeconomics. So let's break it down and let's start with inflation. First, if it is true that the inflation has dropped to that level, then this is a good thing, because this is a 5% drop. So Kenyans are expected to be doing well, because it means that the cost of living has gone down. That today you can walk into a retail shop and buy a product at a lower price. So let me give you a little bit of context. In 2022, or prior to 2022, what did we have? We had COVID-19. We also had, Russia-Ukraine war at its peak. So that affected global economy. So across the world, inflation was up. But at the end of 2022, when COVID-19 went down, economy started to recover, and through several governmental interventions, people were able at least to recover, and their lives went back to some degree of normalcy. But how about here in Kenya? Did we go back to this great recovery path where now we can say our inflation has dropped down and now we are happy? I know in most cases the Kenyan government argues about inflation in terms of unga prices, but when you look at other products, prices are up and up and up. So that's why Kenyans sometimes can't really understand the issue of inflation coming down, even if the government still maintains this position that we've tried our best to lower the cost of living through ensuring that inflation drops down. Still on the issue of inflation, the Standard newspaper reports this: when citizens borrow to buy food, Kenyans now borrow more than 13 billion Kenyan shillings a month from digital lenders, mostly to put food on the table. It is a stark picture of a nation struggling to survive, with families left juggling empty plates and empty wallets. If people borrow to buy food and their pockets are empty, what does it tell you? It tells you that we are not doing well economically. And also, if you talk to Kenyans, they will still say that food prices are high and they do not have enough money to buy even that food. So families are struggling. So when families are struggling to meet the very basic, and you tell them that we've reduced inflation from 9.6% to 4.6%, it will not make sense to them. It will only make sense to them if they don't have to borrow all the time to buy food. That's why Kenyans still grapple with understanding what the government is saying about reducing inflation. I want us to engage on this issue. I am sure most of you go to supermarkets, these retail outlets in your locality. From your own assessment or observation, has prices of some key products or essentials dropped, and do you feel you are in a better position to afford them? However, personally, I understand that prices have stabilized, not entirely because of the Kenyan government's interventions. Global prices stabilized. When you look at global fuel prices, they dropped significantly, but due to high taxes on fuel, prices are still high in Kenya. Similarly, food prices are still high and the cost of living hasn't dropped to noticeable levels. Additionally, I would say the cost of living just stopped rising as fast as it was during the COVID-19 pandemic. So more interventions are needed to make life a little bit easier for ordinary Kenyans. Another big issue here is, can Ruto government or administration take credit for stabilizing the Kenyan shilling? Given that right now our Kenyan shilling is trading against the dollar at 129. So can Ruto take credit for that? Personally, during that time, to be honest, when Ruto took over, I was doing some work with international organizations, and I was earning in dollars. Sometimes you get 3,000 USD. When you do the exchange, especially before Uhuru left, you didn't get a lot. But I tell you, immediately Uhuru left and Ruto took over, as people who were earning in dollars, we were happy because the Kenyan shilling weakened, and to some level it went to 150 Kenyan shillings, 162 Kenyan shillings. That is against the dollar. So for us, it was a windfall. So you get your 2,000 USD. When you do the exchange rate, you realize that things were very okay for you. You could get a lot of money. Because of that, should President Ruto take credit for stabilizing the Kenyan shilling? Because the argument people have is President Ruto weakened the Kenyan shilling, took it to over 150, and later did a little bit of work and reduced it to 129. Okay, people would say it is fine because that was a transitional government. So President Ruto was getting into government as president and was trying to do his math to see what can work and what can't work. So meaning maybe at that point it was the issue of guesswork, and also transitional governments usually have issues, especially at the beginning, where you don't just get things stable. So because of that, people to some extent say cut President Ruto some slack. So essentially my point is, President Ruto shouldn't entirely take credit for reducing the Kenyan shilling against the dollar from 165 to 129, because many people find that misleading. When President Ruto took over, the Kenyan shilling was trading at around 120, but it rose to 150 and above. It later even crashed to 165, but due to massive CBK interventions, it slowly came to what we have right now. So what we have right now, many people see it as just some patchwork, not stability, because the interventions that were put in place were not anchored on more exports. We wouldn't say that, okay, we did something to improve our economy, and because of that we were able to export and generate more dollars that help the shilling stabilize. Ask yourself a simple question: what industry did we build to increase our exports? What outputs did we increase to increase our exports? I understand that our exports, especially when it comes to coffee, tea, they've increased and because of that we're also getting more dollars. But when you look at it from macroeconomics, you'd realize that we are not exporting that much to a level now we can have more dollars to stabilize our Kenyan shilling. So the interventions that were introduced by CBK were not entirely based on longevity, on stability, on high exports. What they did was just some level of patchwork so that we don't, end up in a terrible situation that could make things so worse for many Kenyans. Just to jog your memory, I did a story about the stability of the Kenyan shilling where IMF raised an issue about that, so kindly go watch that video. I will also pin the link of that video just in this video. Let's now shift gears to dollar reserves. President Ruto has talked about this so robustly, so confidently, that we've been able to push our dollar reserves to $12 billion. That is from $5.7 billion, which is something that we should for sure say it is commendable. But now when you go to real economics, how did we increase our dollar reserves to $12 billion? Did we export more and more and more to grow our reserves? That's the question many Kenyans are asking. If we did not export more and more to increase our dollar reserves, then it raises issues about our economy. Let me try to give an analogy here so that we understand this. And here I want you to understand two things. One is you just have 100,000 Kenyan shillings that you've worked hard for. And that money you've put it in reserves or you've saved for emergencies, for trade and all that. But again, you now want to increase your savings maybe to 200,000. So in this case, you perhaps borrow from someone to push your money to 200,000. So right now you have 200,000. But remember that money you've borrowed. And second circumstance is you just had your 100,000. You decide to work very hard and push your reserves or savings to 200,000. At what point will you be happy? I think you'll be happy at a point where you've worked hard to raise your reserves or your savings to 200,000 so that you're able to trade or engage in business activities. Because in that situation, you don't have some serious obligations to repay any debt. But in the first situation that I gave you, you have an obligation to repay a debt. So let me now focus on what the government did to have $12 billion reserves. First, let's give credit where it is due. Our reserves did grow, and without them growing, definitely we could be in a worse situation, because our economy, as I mentioned in the previous video that I did, is largely an import economy. The danger with that is that you must have enough dollars to be in a position to buy or to import, because if you don't have more dollars in reserves, it means now you'll have to spend more of your local currency to buy a product. And in consequence, who are the people to suffer? It is you, a consumer, who will go to a shop to buy something and you will be forced to spend more money because the import cost was definitely high. And I've been able to explain how inflation works. When you spend more to import, definitely that will cascade down to your pockets. That's why we are saying that a stronger shilling puts you in a better position, because you as a consumer, you're likely to spend a little bit less. But if the shilling is so weak, you'll have to spend more to buy a product or to buy unga. Yes, agreeably our reserves did grow, but from Eurobond inflows and borrowing, not exports. Public debt right now stands at nearly 11.8 trillion. You can't borrow your way to prosperity. So that's where now people have issues with the government, that even if you tell us that our reserves have grown and we continue to borrow more and more, it doesn't make economic sense to many of us. And also, if we don't increase our exports but instead borrow more and more to stabilize our reserves or to increase our reserves, eventually we shall be in a terrible situation, because there is no way you'll just borrow and borrow and borrow thinking that will make you richer. It will not. The shilling can be strong, but when you look at it in terms of long term, that will not be sustainable. So at the end of it, citizens will continue complaining. Eventually any external force will make things harder for you as a buyer or as a citizen who is a consumer in Kenya. Let me mention this. All the time we talk about increasing our exports. Let's increase our exports. So I ask a basic question. How do you increase your exports? Do you increase your exports by talk and talk and talk, or by increasing your production? So that means you have to produce what people want in the global market. Then that returns us to this issue I've been talking about, industrialization. You have to industrialize. Kenyans have to be innovative, because this is not a problem that the Kenyan government will entirely solve, but it's a problem that you and I can solve. But we can only solve that when we have the right leaders in power, right from devolved units to national government. So that again goes to ask you a simple question: what kind of leaders do you elect? Yes, CBK has reduced the borrowing rate of the lending rate. Right now the benchmark rate is 9.25%. That is fine, and we should also say thank you to President Ruto and your government for reducing the benchmark rate. Now banks also have to lend at a lower rate, right? But is it happening? If you went to any bank, can the bank give you a loan at a lower rate, at a reasonably lower rate? That is not happening, because Kenyans are still borrowing at a very high rate. And in fact, despite the government cutting the rates, SMEs are still borrowing at between 15 to 18%, which is still tight high. As a country, we should strive to make sure that credit or lending rates are low, so that you as a small business person or small trader, you can go to a bank and be lent some money at a reasonably lower rate, and that will help you expand your business. And when you expand your business, it means you'll be in a position to create employment for Kenyans. But right now things are still a little bit tricky, because the lending rate is still high despite CBR dropping. So CBK rate has been dropped, but implementation or enforcement is still low. Additionally, these financial institutions are not really willing to lend to SMEs. They are willing to lend to the government, because what is coming out is that the government turns out to be the biggest borrower in our financial market. So that's another issue, that our Kenyan government is borrowing from our local banks at a very massive rate. So because of that, banks feel we are safer to lend to the government than lending to these SMEs that can sometimes delay to service their loans or default. So that goes to tell you that the Kenyan economy is not that stable, because there are so many risks. So these SMEs can start but collapse, and when they collapse, as a bank, you lose your money. So there's that kind of uncertainty in our financial market that reflects wrong decision making in government, where now the government has to rely so heavily on local financial markets to lend them money to meet its obligations. So what does it mean? Our economy is not doing well, because we are borrowing more and more to sustain ourselves. Nobody denies that our GDP has grown. Right now it's at 17 trillion Kenyan shillings. That is approximately $130 billion. We all celebrate that, but now Kenyans continue to ask simple questions. As the economy grows, are we also growing as a people? Are we happy? Because right now what we have is that our debt is actually growing. Okay, our population is also growing, and many Kenyans, to be honest, in real terms, are poorer. That is what is happening. Our GDP per person definitely hasn't moved that much. Instead, what we have is that poverty is growing in the country despite our GDP growing. So that is one thing that the government should also in most cases ask. Okay, as our GDP grows, are people also growing? Because that is why I mentioned previously that there's something called economic growth and economic development. For economic development, that's when you're able to see change. Because the economy of a country can grow, but you as citizens, you can continue suffering. So the government should focus more on economic development, because that is what touches lives of all Kenyans. So, has Kenya made some great progress? Yes, we can't deny what graphs tell us, because there is data that shows that Kenya is growing, including our GDP. So, here is the fact. No one denies data, but the big question Kenyans are asking, what is the reality on the ground? Are we better off than yesterday? If we are not better off than yesterday and we continue to suffer, regardless of what graphs will show us or regardless of how positive data is, we shall always say that we are not doing well and the government is not doing much to improve our lives. And in most cases, I usually argue that the measure of economy should be employment. That when an economy is able to employ more people, that economy is positive, that economy should be said to be growing. But an economy that grows but leaves many people behind or leaves people suffering shouldn't really take credit for growth. Now, ask yourself, is the Kenyan economy growing in your favor or not in your favor? If the Kenyan economy is not growing in your favor, then it means the fundamentals are not favoring you. And it also means that as a country, we are not doing well. So, those mandarins in the government should continue to do the right thing. And I've always said that for the Kenyan government to do the right thing, the focus shouldn't entirely be just building roads and funding education, but the focus should also be on building industries. That every development we do must be pegged on a factory. Okay, we are building this factory here, and for that factory to be functional enough and be productive, we must have a road. That is it. But just focusing on things that really do not touch much on industrialization, that is not good. So the Kenyan government should address fundamentals. Additionally, Kenya should also remove this socialist mindset they have built. Kenya is a capitalist nation, so let's also focus on productivity. Let's focus on growing our personal economy. Let's do the right thing. Let's work hard. And as we do that, let's also elect right leaders.